Let's take a look at Infinity Scalper for the last week. Some people have asked me about the Euro Yen, something I don't usually cover. I usually cover the USD crosses, but let's take a look at the Euro Yen. And again, like all these strategies that we talked about in all the videos, you cannot ignore price action and price structure, regardless of the method that you're trading, regardless of what the hype is on any sales page. So let's just take a look at starting at the European session, starting on the Monday, and we're looking at 3 o'clock in the morning to start, and we're going to look at the first 2 to 3 hours. This is what the PDF says, the training manual. So if you're trading outside of the hours that's recommended, or you're trading different currency pairs and you're not doing very well on it, that's your own problem. So you should really make sure you're following the rules that come with the strategy. And as you can see here, this moving average is one that I put on. It's a 20 simple period moving average. And it's just to give you a objective view of the trend. Again, the PDF talks about making sure you're not trading in chop. And with the moving average, you can pretty much see when you're in chop, especially when the price action is hugging the line or whipping back and forth over top of the line. But you also can notice, just by looking at the chart, you can see price action, price structure. For example, coming into the Euro session, which is just after the Japanese session, you see we're in a trading range, right? So let's just take a, and it's not something you want to trade in, right? And you're only looking at a 14 pip range. Okay, so you don't have a lot of room for error. And you can also factor in some trend lines. You can see that price is trending downwards. We can connect some highs here. And our lows are pretty much the same, right? If you just want to connect these. So you can see what we're trading at. And just by using simple technical analysis, you can keep out of a lot of crappy trades. And you can also be alerted to when trades are, setting up that could be, have a higher probability of being good trades. So if you look over here, our first setup, we're already in a short setup in through here, but 3 o'clock is right here, and we're in chop. You don't trade. And our trend line is coming down through here. We see price breaking above it. Whereas our first long trade is right here on this green candle right here, and price rockets up, for peak 27 pips. And if you wait it until this exit here, which is pretty much at the close, it's called the optimal exit, you're looking at 22, 23 pips. Okay, that's the European session. And like I said, the first 2 to 3 hours, probably want to lean more on the 2.5 hours. And you can see again, we start going into some rangy price action. And how can you see that it's range? It's obvious. We have your higher high here, lows in through here. Let me just bring up the screen drawing app here. And it's common sense. You have your high here, low. You can see we're trading inside here. So inside of this whole area right here is our chop zone. We don't want to be taking any trades that's set up in through here until we start getting trades breaking out, okay, which we do get into the morning here. And this is 8:25. So again, like I said, these ranges are obvious. And if you're trading inside of these ranges and you're complaining that, oh, I'm not doing too well, it's because you're not following the rules that are laid out in the strategy. Let me just get rid of this. Try to get rid of this anyways. There we go. Okay, so again, we can just connect lows, right? We're looking for breaks out of the lows. If you look at the moving average, we're not looking at anything to the short side on this break. And our first trade sets up here at 8:25. And again, where's this trade setting up? It's setting up at a support area. But here's the thing. Basing at a support area is conducive to a break south. You want to see a bit longer. It's only a 5-minute chart, so this is not the kind of basing I'm talking about. I trade higher time frames, so my basing that I'm looking for are multiple days, not just 15 minutes of breaks of consolidation. And you can see it breaks the lows. And what does price do? A lot of times they say don't trade breakouts. What do they tell you to trade? Breakout pullback, right? Breakout pullback. Just because it trades inside of here does not mean that this move is invalid to the downside. And if you think logically what happens here, this is normal price action right through here. Price breaks down, and the entry price is here. Your breakout pullback. So what do you do here? You're trading against the moving average, which is starting to flatten out here. Let's move over here. See, you see how it's flattening out? Okay. So what can you do? Well, use context. We've got basing price action that had just broken out of a range, breakout pullback. Our entry price on this trade is actually the close of this green candle, right? That's how we trade this, which is at 130.72. We trade back into it. I spoke about in another video about getting in sync with the strategy, and if you were to do that, 23, 24 pips, not a whole lot, same as the Euro session, but again, it depends what you're trading. Trading a dollar, roughly average, because Euro, Japanese yen is not going to be $1 a pip. It's going to be depending on what currency you're trading. But let's just use $1 a pip. All right, it's $23. That's nothing. But what if you're trading multiples of that? Right, that's when you start to make money on these. But again, comes back down, pulls back up, and we have a long trade here at 11 o'clock. But remember what I said: first 2 to 3 hours, we started at 8 for the U.S. session. 8 plus 3 is 11. There's no trade that you would take here. And what would happen is, this is what happens the rest of the session. So we get a lot of choppy price action, right? So you can see how that played out here. So did you get some profitable trades? Yes, you got a profitable trade in the London session. And you got one profitable trade in the U.S. session. And if you just followed this blindly, you would have been buying here into resistance. What don't you do? You don't buy into resistance. This is standard trading. Okay? A lot of these strategies make things too simple. I guess I want to use the word simple. But you still can't ignore just the basics of trading. And if you're trading and you're buying long into resistance, which you can do if there's certain price action that you're looking for, but in this context, it's not what you're going to do. Anything like Infinity Scalper or Pips Wizard Pro or any of the other strategies that we've talked about, they give you the setup, they give you the entry, but it's up to you to filter it out or not filter it out. This long is filtered out just by the rules in the PDF, which says do not trade in a non-trending market. It's by looking at the price action, drawing some simple lines. These are not trades that you would take. And I can guarantee you someone went long right here, went up, 2-3 pips, and it fell back, got stopped out, and they're blaming the strategy. It's not the strategy's fault. It's your fault for not following the rules. Let's move on. Here we are the next day. I'm going to keep this video short. I'm only going to do a few days. Just keep it short. We start at 3 o'clock, which is right here. Let's take a look at the price action. Well, our moving average is down. The moving average is not part of the strategy. It tells you to trade with the trend, and that's what we're doing. Let's draw a horizontal line. Horizontal line. Now, if you're going, well, that's not a proper line. You got to, take into account this. Well, again, that's at 320. It hasn't happened yet. And if you think that you trade or you put horizontal support and resistance lines on extremes, well, that's standard textbook trading, but it's not... well, I'll just leave it there. You can trade that way if you like. Anyways, we're looking to go long. This is telling you long. This is telling you to go short. But where are we once again? We're trading inside of how big of this range? 10 pips. It's even worse. We don't get a short trade set up till 535. Now, this is what I've talked about. Look at the basing that's going on at support. This is the kind of trading, and you don't need this strategy to do this kind of trading. Just looking at some basing before, this kind of stuff here is beautiful when it's at support, on the top of support actually, or at the bottom of resistance up in these areas here. These are great setups. Anyways, so we got 8. We started at 3. We're looking at trade until 6 o'clock, right? Here's at 5:35. This trade set up to go short. Would you go short right here? Or would you say, well, I got some extremes here, so let me just put my stop order right here? Well, you could do that, and then look what happens. Problem is, we're past our time, right? And it eventually does drop, 30-odd pips, or even more so. But we can't get into this trade. Why? because at 6 o'clock is when it finally breaks. You could get into this trade, right? This is at 5:35, so I guess you could, right? Because we're saying we're going to trade till 6 o'clock. So let's just put a line here on the. This is your entry price. You get a little bit of heat, but this trade takes forever, and you get out right about here if you're using the optimal exit for 27 pips, or you just write it down however you want to trade to the opposing signal, which is right here, or you just hang on. I don't know how you trade it, however you want to trade it. Or you just can trail your stop. It's all depends how you trade, right? Below highs, above highs. Okay. So, anyways, this trade is at 5:35. It's in the basing area we've talked about, but perhaps you don't take it there. Perhaps you wait just a little bit longer to see if you can see some basing. But if you wait too long, you miss this move down, right? So that's the thing you want to be careful of. All right. How are you going to trade these? Are you going to trade right inside when you've got these basing areas? How are you going to trade? Right? Have a rule for how you're going to apply this. Remember, this is going to give you the signals. It doesn't know that we've got a support area through here that's lasted, started at 130 and finally broke here at 6:45. It doesn't know, right? It's up to you. And let's go to 8 o'clock in the morning. 8 o'clock in the morning has a trade to the upside, but do we take it? No, we don't take it. Why not? Because we have this moving averages down, right? We just broke out of this area here, right? You can actually say this breaks through this and this. So you can actually move your line through here under the consolidation, okay? And even if you didn't, this still comes up close enough. So anyways, we don't get our first trade short until 9:35. Is there any reason you would not take this trade? There shouldn't be. There's no reason why you wouldn't take this trade. Right? We got price moving down. It's putting in a lower low from here. It's putting in a lower high than here. There's no reason why you don't take this short trade. And it pulls out 28 pips if you get out here. And if you wait till the opposing signal at 12:55, that's a long trade. That's 52 pips. So again, depends how you trade it. All right, so I'm going to just wrap it up here on this day here, because all I wanted to talk about in this video was, if you're looking at these strategies to be the holy grail, that it's going to hold your hand, it doesn't happen that way. Take into account trend, take into account consolidation, take into account price action, right? If you're trading aside of this, even if you're trading a strategy that scalps highs and lows, right? Support and resistance. You're only looking at 11 pips here. So the room for error is very, very slim. So let's wrap it up. Do your own checking with these. I can just keep on putting videos and videos out this of just applying technical analysis to these charts. And that's how I would trade these charts if I was trading these, right? Some person had made a comment that I don't even trade these. Absolutely, I don't. I don't need to. I prefer swing trading. I don't scalp. But for a lot of you that have small trading accounts, why wouldn't you scalp? Right? That's the way you're going to build your account up. That's by scalping and day trading. You can do it by swing trading, but that's going to take a long time. All right, let's wrap this up here. If you have any questions, just shoot me an email or put a comment in below, and I always respond. Thanks.